ice. You can get more cars.
This episode of My Two Satoshis is brought to you by Heat Wallet. Heat Ledger is building the world's most accessible microservices platform and crypto wallet, launching later this year. But in the meantime, download their latest Heat Wallet and witness the user-authenticated crypto wallet and non-custodial decentralized crypto exchange feature. Available for Windows, Mac, Linux, and Web Wallet. Download now at heatledger.com. Yo, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is August 15, 2019. Shout out to my man Michael McGuire out there on YouTube for the song request Black Sheep. The choice is yours. I love this joint. Very classic hip hop track we're rocking to today. What's going on, people? Hope you guys are doing well and welcome to another episode. Man, today we're going to look at a little bit about this bloodbath we've been seeing in cryptos. Primarily, I want to focus on Bitcoin. $2,000 in a couple of days we've lost. I think we may have a culprit. Not sure, but hey, we're going to at least take a look at this theory. It's based on a Chinese Ponzi scheme that I guess got unraveled or whatever. We're going to take a look at the details on this, but they may be the reason why we're seeing this sell-off in Bitcoin. It was a $3 billion Ponzi scheme over there in China, and it was pertaining to like Bitcoin or whatnot. So we're going to take a look at that. And also out of Crypto Vest, the global recession, inverted yield curves. If you guys haven't heard, you must be under a rock. 10s and 2s inverted, I think, yesterday, causing 800 point drop in the Dow. But this article poses the question, what does this mean for Bitcoin? And I'll give you my two satoshis on that as well. And lastly, out of AMB Crypto, Litecoin Foundation addresses recent dust attack along with details on how to avoid it. I didn't report on this last week. I saw this happen. Didn't even know what a dusting attack or dust attack was. But it was interesting to see what was going on with the Litecoin network and get your opinion on it. There's a lot of drama with this. A lot of people were talking about, end of Litecoin and so on and so forth. But again, we'll take a look at this in a second. But before we get started, guys, I do want you to know that Moon Lambo has a giveaway. It's called the Grab That Bag giveaway. Over $200 value inside, plus a Ledger Nano S included with this. Just check out moonlambo.tees on Instagram to find out more details on it. And they want to bring that to your attention. So definitely get over there. And also, you can save 10% if you use the word CryptoBlood10 at checkout on moonlambotees.com. Just thought I would drop that to you as well. So let's take a look at the heat map for the cryptocurrency markets. All red pretty much today. Bitcoin down 4.83%. It's been battling that 10,000 area. It dipped below it. I think it touched like 9,500. So, man, not looking good there. EOS down 11.7%. That is bad. Down to $3.54. ETH is not too far behind, down 10.5% to $183.90. Litecoin down 8.3% to $75.26. These alts are getting hammered. They are getting hammered. I would say, at least with Litecoin, it's fundamentals. The halving is over. But no, I can't say that that's the case here because all of the altcoins are getting hammered here across the board. I would say reallocation into either Tether or Bitcoin and Tether. It's got to be a mixture of those two. As we see, Bitcoin is not down nearly as much as all of these altcoins. So there definitely is some bleed over from the alts into Bitcoin and also Tether as well. The month chart again, or month performance from the heat map. Bitcoin is still up 6% for the month. Got Ethereum down 7.8%. EOS down only 3.3%. And Litecoin down 5.6%. Binance is up 9.7% for the month. But as you can see, most of the altcoins are still red here. And if we take a look at the charts, wow, we did not see a bounce off of that top side. Well, at least we tried a little bit there. If I zoom in, you can see we tried right there, but failed. Okay, as we failed, we broke down, and if I extend the bottom portion of this channel, that goes back all the way down here, guys. We bounced off that area, and so now we're back in the channel. Deja vu, we're back inside this channel. This just illustrates that technical analysis can only go so far, as we're going to look at this one article about this $3 billion Ponzi scheme and how that may be correlating to the sell-off. It can only do so much. That is technical analysis. Fundamentally, things move the market. Fundamental analysis or fundamental events are going to trump any technical analysis that you may draw up. So you just have to be diligent and be reactive to the situation when trading. So I'm hoping that we actually attempted to get back out of the channel right here, but we got blocked. As you can see, it was a block. But maybe we can try to attempt another breakout here later today. So we'll just have to see what happens there. But Cointelegraph, let's talk about this Ponzi scheme. $3 billion Ponzi scheme is now allegedly dumping Bitcoin by the hundreds. Wow, amid a downturn in the cryptocurrency markets, the apparent swath of Bitcoin sell-offs from a $3 billion Chinese Ponzi scheme could be to blame. So it says on August 14th, Dovey Wan, founder, partner of blockchain-based investment company Primitive Ventures, called attention to the ongoing sell-off from the fraudulent Chinese investment scheme dubbed PlusToken. It says that as Wan outlines, PlusToken was created in mid-2018 and promised high-yield investment returns at different rebate percentages to its 4 tiers of members, a classic Ponzi scheme structure. By early 2019, the project claimed to have over 10 million users, or members I should say, and so Wan has attached data on all the wallet addresses including Bitcoin, Ether, and EOS. Oh, wow. Known to be associated with the PlusToken, and urgently called on exchanges and over-the-counter platforms to blacklist them. She notes that Chinese police hunted down a core team member of the scheme 2 months ago and have revealed that investors were scammed of a whopping $3 billion. Alongside the addresses, Wan has attached investigative data from security audit firm PeckShield that reveals the money flow from PlusToken's wallets as of early July, the date the sell-offs are thought to have begun. So look at this. This is insane. $3 billion, guys. And it goes on to say, despite the arrest, the cryptocurrency cannot reportedly be rolled back, as Wan explained. Many of the Bitcoin addresses were started with P2SH, which commonly were used for multi-sig. Most likely, some people who hold the keys are not being caught. Hence, police can't unlock the wallet. But for the EOS ETH wallets, that can be a different case. But so far, police were not able to touch any of those either. In an attempt to curb the impact of the sell-offs, she has recommended that PeckShield and blockchain analysis firm Chain Analysis analyze the flow more closely, noting that PlusToken appears to be moving their funds in small batches of 50 to 100 Bitcoin into exchanges. Chinese traders have reportedly claimed that an unknown address has in the recent days been dumping 100 Bitcoin incessantly on crypto exchange Binance, which Wan suspects to be connected to the scheme. As just reported, the PlusToken scheme was identified as being the largest single incident of losses in a recent summary of 2019 crypto-related theft from blockchain security firm CipherTrace, having purportedly defrauded investors out of $2.9 billion. Wow. Yeah, this probably does have a lot to do with this recent sell-off. You guys let me know, do you think this PlusToken Ponzi scheme is the culprit behind this bearish move we've seen, 2,000 point move downward in Bitcoin and subsequently Ethereum and EOS as well? So again, here we go. You have to, if this is the case, you have to take advantage of this opportunity, because this is not a fundamental from a perspective of people's confidence. There's something internally not going right with the crypto markets. No, this is more so of a massive dumping of $3 billion in stolen funds from a Ponzi scheme that has caused this misallocation. And so when you have this misallocation, you're going to probably see the markets eventually pick up on that and buy it up and get it back to where it was So, take advantage of this. Not giving you financial advice, but at least look into this and see if that is the case for yourself. But me personally, I think so. So I'm going to be definitely buying here and loading the bags up and dollar cost averaging out of this slump. Global recession, inverted yield curves. What does this mean for Bitcoin? CryptoVest asks. U.S. Treasury bonds follow the global trend to enter the territory of inverted yield curves, signaling recessions. So it says reverse yield curves have spooked economists for a few months now, originating in Japan and Europe. But now the U.S. government bonds are sporting an inverse or reverse yield curve, where short-term debt has a higher yield in comparison to 10-year government bonds. The events mimic the behavior of U.S. government bonds not seen since the fall of 2007, which precede one of the largest global financial crises. Usually long-term debt will have a higher yield to pay for the risk taken, but not now. Taking a risk with the U.S. government means the return is lower and can even be negative. Crypto analysts sees this as a pivotal point for Bitcoin, which may see increased interest in the case of a global crisis. Gabor Gerbax, what a name, digital asset strategist at Van Eck, has noted that the current financial conditions may signal a boost to Bitcoin's investment. And he says, according to Deutsche Bank, 27% of bonds in the world trade at a negative interest rate, with a total market cap value of 15 trillion or 75 times Bitcoin's market cap. It's time to plan B. That is very interesting. I like how he worded that. And it definitely is time for plan B. So it says, so far, there is no precedent to define the link between negative yield curves and the behavior of Bitcoin and crypto investors. But there is a possibility that falling stock prices and debt anomalies may bring more investors to digital assets. Bitcoin has its own set of risks that could wipe out wealth as the asset is still extremely volatile. The news of a U.S. recession looming and global economic slowdown coincides with a slide in Bitcoin prices. But I just want to interject. We know now this could possibly be a correlation thing and not a causation. Okay. So we have to just keep that in mind now that we know that the PlusToken Ponzi scheme has been dumping $3 billion and it started in July. This could be the cause of this slide, and it just so happens to correlate with the slide in the U.S. stock markets. So we'll have to see what happens. I personally think that there's still no correlation, as I stated yesterday, which is actually a good thing. And that doesn't mean because there's no correlation with these traditional asset markets that there won't be in the future. Like, because there isn't any correlation, that may be a reason for a correlation to start. So we may start seeing some of that $15 trillion in bond debt spill. Just 10%. 10% is $1.5 trillion spilling over into the crypto markets. That will have us definitely at $50,000, $60,000 Bitcoin, without a shadow of a doubt. And that's after the dust settles. We may see a flare up to 100,000. This is a possibility. So hold your horses. I saw someone on Twitter this morning saying that he's liking more and more precious metals because he's seeing how the SEC is coming at, these crypto tokens. And I had to remind him, you can't take $1 million worth of precious metals across any borders. You can't even put that in your vehicle. Okay. On top of that being a big security risk for your own safety. Cryptos are definitely, if I had to pick, is the best one. Bitcoin is better than gold if you're talking about, storing it and trying to preserve some wealth. Is it more volatile? Yes, it is. But I'm willing to take that risk with volatility and being able to be discreet with my money, my wealth, being able to cross borders, go wherever I need to go. I'd rather have that than not be able to have or transport millions of dollars of gold anywhere. You'll be stuck. You have to stay where your gold is. Okay. So in that case, cryptos are definitely better. They're more fungible. It's just so many more reasons why you would want to hold crypto over gold. And stop listening to Peter Schiff because that guy is going to lead you or continue to lead you down the wrong path. But if you need to use gold for something more in the manufacturing, industry, yeah, I mean, I can't make a ring out of Bitcoin. I can only make a ring out of gold. And there are other industrial reasons for gold as well, but you get the point. If you're trying to keep your wealth stored in some type of asset other than stocks and bonds or real estate, sure, have some gold, but I would be overweight Bitcoin in particular. But let's take a look at the last article out of AMB Crypto. Litecoin Foundation addresses recent dust attack along with details on how to avoid it. So Binance recently highlighted that many Litecoin users on their platform came under a dusting attack on August 10th. Litecoin Foundation today addressed the issue and released a blog post titled How to Identify and Mitigate a Litecoin Dust Attack. Unlike privacy-centered coins like Monero, Litecoin transactions are not private by nature since it works on DLT, and every transaction on the network can be verified on its open ledger available to everyone. However, users who prefer privacy often use certain tools like a coin mixer to hide their transactions by mixing it with several other crypto transactions. A dust attack is generally carried out to know the identity of such private transactions, which the scammers can leverage to get private information of the users. So what is a dust attack? I didn't know exactly what this was either, but a dust attack is done to know the whereabouts of these kinds of masked transactions. The scammers send the smallest denomination of crypto, 1 Litecoin, to the target wallet. Since the amount sent by the scammer is next to negligible, the target user often never notices it. So whenever the target user makes their next transaction, even with an anonymous tool, the small amount can be tracked by the scammers. The term dust comes from the small amount of the crypto that is used for the attack. The blog post makes it clear that a dust attack is no way a serious threat to the security of the Litecoin blockchain and is only concerned with the privacy of the transactions. Users who face the dust attacks are not in any danger of losing their funds. However, one must be cautious as the dust attack can lead to ransom threats if the scammer gets their hands on users' private data. The Litecoin Foundation advises users to use different addresses for transactions, funds, or using VPNs to confuse blockchain surveillance tools. If a user is already under the dust attack, they may convert all their affected coins into another cryptocurrency to avoid being tracked. Well, that's a lot of work for people, and that does not bode well for any type of real world use case for Litecoin at the moment. I don't know if they're working on something to fix this, but again, these are the types of things that it won't work on a larger scale. And I'm only talking about it from the aspect of using it as a means of payment, as a payment network. But if you're talking about speculation, sure, I think Litecoin is great for a speculative play. It'll probably go up in the next bull run, but I think it'll lag like it has always. I first bought Litecoin at 56 cents, so I'm very familiar with Litecoin and how it behaves against Bitcoin and other altcoins. It's normally a lagger. I still think there's going to be a lot of growth with that. It's going to outperform many other asset classes. Will it be 1 to 4 or 4 to 1 to Bitcoin? Who makes this stuff up? Like, where do people get this from? Help me understand how people derive a 4 to 1 to Bitcoin in the comments below. Please help me understand where you're getting this. That's nonsense. It's never been 4 to 1, and there's no reason for it to ever become 4 to 1. But it will do well, in my opinion. I definitely think it will do well. But that's pretty much it for today, ladies and gents. Thank you for checking in with me today on this My Two Satoshis episode. Shout out to my man Michael McGuire again for that song request, Black Sheep. Definitely a classic there. The choice is yours. It's your boy Crypto Blood. That's My Two Satoshis for today. Make sure you guys like, share, and subscribe, and click that bell to help grow this channel. I'm out of here, people. Holla!